So I want to quickly talk about the difference between day trading and investing. I think a lot of people get it confused. Anytime you talk about investing at all, people think you have to start staring at charts all day and understanding what all that means and get really invested. But hopefully I can dispel some of those myths here today. So some of the characteristics of day trading need three main things: a resilient mindset. Um, when you're day trading, it really takes a lot out of you mentally. You have to make decisions quickly on the spot, and just anything that involves money, you're going to get emotional about it. So it's being able to handle those emotions, being able to handle losses, and then continue to trade without losing that momentum. Day trading is fast paced. So unlike investing, you will have to make multiple decisions over the course of a day to make money or to mitigate your risk to not lose too much money. So just being able to be comfortable under those conditions for an extended period of time within a day. And then also, when you're day trading, you want to take in as much information as possible that is helpful to you. So that involves skills like technical analysis, maybe using that with fundamental analysis. That's like watching the market news and just taking in a lot of different sources to be able to make the best decision, to put yourself in the best position to be profitable day over day. Something to keep in mind that just because you take in all this information does not mean that you're going to be right or you're increasing your chances to be right. So it's really just about finding the balance that works for you. The pros and cons of day trading. Naturally, there's the pros of having the potential for high profits. So it's high risk and high reward. And then also, if you can consistently and profitably day trade, then you have the freedom and flexibility of your time. And I think that's something that everybody wants. The cons, as I said before, high risk. There's a chance for you to win a lot of money, and at the same time, you can lose a lot of money really quickly, especially if you don't have your risk management and your trading plan in place. It does require a lot of time and effort to, I guess, get up to speed, but I think it's one of the most rewarding things you can learn to do. It can be stressful, and certain aspects of it can be addicting. Like if you make $100 in like 5 or 10 minutes, that feeling is really like nothing else in the world. So you can get addicted and start chasing that feeling. And then again, like I said, that kind of falls back into that high risk category where if you don't follow your plan or your risk management strategies, that's a quick way to lose a lot of money. And then also, as I said before, just anytime you're making a lot of transactions with money, that's going to be a heavy burden on your emotions. So you just have to make sure you're keeping that in check. Now, we're talking about investing. It's a completely different approach than day trading. It's more value driven than data driven. So you're looking for a good company more so than just a good moment or a good position in time to act. So that's talking about buying something like Apple or Tesla, the leaders in that space that over time is going to make you a lot of money. So day trading or just trading in general, that's more so short to medium term. But if you're investing, you're going to be in this for 5 to 10 years at least. That's the mindset you should approach it with. So that moves on to my next point, it being long term. And then in addition to it being long term, you really want to diversify. With day trading, you're more so mitigating your risk on a dollar amount. But when you're long term investing, you want to mitigate your risk by the assets that you're buying. So you want it to be spread out across multiple different sectors, or just you can buy indices and stocks. And then there are other ways that you can hedge your risk. So it's really about learning about the different ways that you can protect yourself over time to diversify your portfolio. Pros and cons. There's a long term for growth. So over time, you can make a lot of money, especially if you're consistent and you buy a very solid project or company. Some stocks have dividends, so that can turn into a passive income stream for you. And of course, there can be tax benefits as well, as opposed to day trading. The longer you hold a stock or asset, then you can pay less tax on it, versus if you're day trading, you have a higher tax rate for that revenue. Some of the cons, for sure, it takes a lot of patience. Like I said before, you can be waiting 5 to 10 years to really to get the move that you've been investing for. But at the same time, that gives you time to really build up that position. You're not immune to market volatility, and that just means your portfolio will go up and down. Just because you're in it for the long term does not negate you from the risk of your portfolio going against you. But then it just goes back to having that discipline. And of course, if you're investing long term, then there still is the risk of it going, like companies going out of business and things like that. So you still have to be cognizant of things like that. So in conclusion, day trading and investing are two completely different things. I think a lot of people like to kind of group them in the same category, but they are very different and they both have their pros and cons. But I think if you choose to do one, then it'll be very easy to pick up the other. So thank you for listening.